Good morning, traders. It is Friday, December the 5th. Taking a look at the charts, we got the SP 500. This is the daily chart, and we've been seeing it run up this 5-day moving average. We're starting to see it chop around a little bit, but overall, we started to see a pullback here, and we saw bonds spike up. A lot of people were expecting a top here, and instead we found support. We've had a nice strong bounce. We poked to new highs. It's kind of stalling out right here, but overall, the trend is up, and from the looks of it, it looks as though the equities market wants to continue to grind higher. Now, if we take a quick look at the bond futures, you can see we got a short-term kind of bearish pattern. Overall, we've pulled back, kind of traded sideways here. We kind of had a little mini basing pattern that once it popped out, we had a nice run here. This is when the equities market sold off. And now we're starting to see it move down. It's got a little bit of a bear flag, and we could see this potentially continue to move down and create this ABC retracement. Meaning we've seen this pullback down to here, and then you see a bounce, and then of course we see a poke to new lows. We really need to break this pivot low over here. If we break that level, that will kind of flush bonds out. We'll probably see it come down, test this longer term moving average, and the equities market will continue to rise as bonds kind of drift down here. And I think there could be a great opportunity to get into bonds again and get long. We were kind of looking for a breakdown over here, never happened, but it looks like it's coming in the next few sessions from the looks of things. The market always has a way of dragging things out. Usually if you think something should happen, usually the market can drag it out 2 or 3 times longer than you ever anticipated. So you just have to really sit back and relax and let the market kind of do its thing. Sometimes you miss a bunch of opportunities, other times you can catch a bunch. The key is it's all about timing yourself in the market and making sure you're not forcing yourself into a trade just because you want to get active. So let's just take a look at the Russell 2000 here. The SP 500 has been holding up fairly well. Just started to get choppy here. The Russell 2000, like this one here, you can see here it's been trading sideways for over a month already, and it's been trading in this choppiness, and it's kind of just consolidating up at this previous pivot high. Now, if the Russell 2000 breaks to the upside, it'd actually be a fairly bullish pattern. If you look at this big picture here, we've seen a massive rally, and it's been really flagging here and really kind of showing some weakness. It's got lower highs, lower lows, but it is struggling up here. This volatility looks as though we could see a little bit more choppiness or even more of a pullback, but overall it is holding up a key resistance right at the upper end of this high volume range. If it breaks to the upside, the small caps will have fully rejuvenated and they've got potential. They could explode to the upside and continue to rally. So I'm not really going to get into the details, but like if you take a look here, big move up, big consolidation. You could see a massive move up in the small caps. We could see the equities market just continue to rip to new highs overall, including the SP 500. So really, that's why we follow the trend. You never know what's going to happen. I think everybody's expecting the market to sell off, and that's usually the reason why the market will take off in the opposite direction. So it's going to be very interesting how the market plays out here. It does look weak, the big picture of the whole broad market, but it won't take long for everything to kick back into a strong uptrend and it kind of negates a lot of the weakness that we've seen. If we see this break to new highs with some big volume, that will be a very bullish thing. Now, looking at the Canadian side, looking at the venture capital, you can see this massive move down, big consolidation here over the last year or so, another big move down. It's starting to get into a bottoming type formation of a pattern here. Still lots of fear in the market, but it is making new lows on lighter volume. You can see these new lows. More or less, if you've been following me for a while, you'll know you get these 3 surges to a low, and then you can usually see some type of knee-jerk reaction and possibly new uptrend. So we are getting to this 3 surges. Very interesting for the small caps in Canada. And again, we saw similar price action over here. You see, anyway, you can see volume more or less slowly got from extreme high selling, big selling, and then eventually it dissipated. And of course, the market made lower lows with lighter volume. Eventually, it had a strong rebound. Now, this didn't have 3 surges to a low. Similar to this is more of a bullish pattern where they're closer together. But you get the gist that you usually get some type of rebound and kind of bounce and go from there. So very interesting how the small caps in Canada, much more bearish, but they're looking to put in a bottom. And if we look at the TSX, it got hit yesterday with one of the biggest down days in 18 months, I think it was. Overall, it's pretty strong selling going on, But again, the overall picture is, let me just see if I can go back even further here. All right, I can't pull the data up on this chart here going back far enough, but overall that we've had such a strong move in the Canadian uh, the TSX here. This price action very big, but in the grand scheme of things, it's a very small consolidation and price action volatility compared to the recent rally and previous major levels in the past we've seen years ago. So overall, this is potential start of a further downside move. And if we were to just zoom in on this chart and we were to just throw a tight Fibonacci extension, we can go from the high to the low to the high. If this is going to continue to pick up speed, we've got another day or two of strong selling, which will run the market right past this pivot low, and that will flush out any longs that got in over here. Anybody who's got in here will likely have a protective low, a stop put in here, or at this pivot low right down here. And of course, what we are looking for in the market to cleanse it is simply an ABC retrace, which we're starting to see here. We got 1A, B, C, and if it runs and breaks these lows, that could really flush the market out. We see some strong panic selling, and that's when you usually see the rebound and the market takes off with everybody who's long over here gets shaken out over here, and then the market takes off without them. It's kind of how the market prefers or tries to move or does move more or less. So going to be interesting to see how that plays out. I think we could see a little more weakness. Obviously gold and oil definitely affects the Toronto, the TSX, but let's just take a look at crude oil real quick. Crude oil continues to push down, make new lows. We are seeing increased volatility. I do think an end is coming sooner than later, but again, the weakness is definitely putting pressure on the TSX. And taking a look at gold, gold's had some pretty strong rebound here in the last couple sessions, but overall the trend for gold is down. It's been putting a lot of pressure on the TSX also. Now, let's jump over to some of our other positions here. Looking at the REM ETF, which is the real estate. It's continuing to hold up above the 5-day moving average. It looks as though it's had a nice pop and consolidation for the last 3 sessions. Hopefully we can see it continue to pop and really squeeze up into this previous high. Still looks bullish, although it's starting to lose a bit of buying strength. You look at the volume overall. It's fading down as prices going up, and of course we are coming up into resistance, so fewer and fewer people want to buy it as it gets close to resistance because there's less profit potential. So we're still looking for that one big pop in price. We see this take off and we'll be locking in the balance of our position, locking in the gains there. Now looking at EEM, continues to try and build this base. It's had several pokes to new highs here. We've seen it pop and break this previous high over here. We've seen it pop and just break again over here. And then of course we had that bout of selling in the overall stock market globally, pulled everything back, and now we're down into the lower end of the support range. And hopefully we'll see it find support and eventually break and have a relief rally all the way up here to the 44, 45 area. Taking a look at natural gas. Natural gas is up almost 2% this morning. We had that big sell-off. We had the inventory storage numbers come out yesterday, which weren't that strong, but overall the impulse wave, the overall trend here for natural gas, because we've had this strong wave breaking a previous significant high, that turned the trend to the upside. And the fact that we're pulling back down to these previous lows and that we're running the stops, running the longs out of the market over here from these previous lows. I pointed it out the other day that when you have these high volume levels, you'll usually see the market try and do some type of retracement that flushes the market out. So everybody who's accumulated here, it'll stretch far enough below that level that it hits their stops and flushes them out. And it looks as though that's what we had yesterday, and we're starting to see a rebound today. And if with any luck, we could see a massive rebound in price going forward in the next few sessions. Anyways, that's really it for this morning. I'll talk to you in a little bit. Bye-bye.